All right, week 5.2 market outlook, beginning with British pound futures. We got some major price action here. We completely blew through the bearish price leg, which was also the initiation of a bearish run. We cleared the previous daily liquidity point that was the high of a previous bullish range as analyzed. And that led to a run on this line here that I had to look back a lot deeper in price action to make sense of where we were going and why we were responding where we were. And so if I zoom out here, what we ended up doing, as you can see, all this price action is below that line. We actually ended up running a 2022 macro liquidity point, which was right here. And so GBP USD and GBP pound futures, or really the relationship between the pound and the dollar, is in a major transition period. As of right now, the price action is bullish, but what we need to assess here is the response at this macro liquidity point. Is the action a break of structure, or is it a draw on liquidity? And because this has broken out of a previous bearish price leg and seemingly immediately into a bullish run transitioning the phase, it really doesn't make sense, because usually we transition from range to run and run to range. And so what this leads me to think is that this entire price leg moving lower was essentially what people would call a bull trap or a bear trap, in which price generates this price action, generates a price leg that presumes a bearish run or presumes a certain structural action or structure that's going to play out, and it completely does the opposite, in which it cleared all of the liquidity that was forming for these cells. And so what that means is, because we cleared this price leg and all this liquidity that was initially looking to sell here, and then we decided to run this high, and the 2022 high, there are two things that can happen. First scenario is this is a break of structure of this 2022 high, and we just continue to moon. Scenario number two is we draw liquidity in line with the bear trap, with clearing out all the initial sellers, and then perform this draw in liquidity and have a low effort, high momentum bearish run, taking out all of this liquidity here, aiming for this price point here, liquidity point there, and then ultimately this liquidity point here. Now, I talked about this briefly with my students, and we made sense of this, and so we're looking for opportunities to play based on both scenarios. Going down to the 4-hour time frame, what we would like to see, because this is where we define our structure, we use the daily to mark up those key really pivots or transition or macro liquidity points. What we would like to see is, if there is a draw on liquidity, if this is a draw on liquidity, I need confirmation by clearing out the liquidity point pre-liquidity draw. And so if that is to occur, I need to see price take out this liquidity point in the form of a break of structure, or price is going to forego that and continue higher. That's the immediate analysis. I don't want to extrapolate too far. I'm going to wait and see what price action does. Now, I did also talk about with my students an aggressive confirmation, which is using micro or really execution 5-minute structure. And it did give a very, very nice response. But like I said, this is very aggressive. And so the break of structure that happened here led to the pullback and mitigation of this 5-minute price gap, which I did take a trade on. I held it, moved my stop loss to break even, and price came back and tagged me out. And then price moved slightly higher. Now, just because I was taken out here does not mean that this negates the potential draw in liquidity. To me, like I said, this is just an aggressive, very aggressive confirmation anticipating that price action is going to be bearish. And if it is true, if we are going to be bearish and I did get taken out here, it just means I was early. And consequently, this has the same structure. This price action here has a similar structure to what happened here on the 4-hour time frame. Or really, I should say on the daily time frame, where we have a price leg, a bearish price leg that was generated based off of mitigation of some sort of, response, which is similar to the 5-minute, which is what I got here. And then we ran lower just in the 5-minute perspective. And then we pulled back to take out that entry and take out that liquidity, which I was now a part of. And so if this has the similar structure, because this is extremely fractal here, what could be the case is that I was early, price failed to, continue lower after making that initial run. It pulled back, took me out, and what could possibly be happening is similarly, we could be running a previous high here. And so if that high is broken, what I would look for is mitigation of a higher, price gap, or I would just simply wait because there wouldn't be anything that makes sense for that 4-hour confirmation to give actual, confirmed entries, because that'll be a lot more data supporting the break of structure or supporting the liquidity draw of this 2022 liquidity point. So that's what I'm seeing on 6B1. On gold, it's just absolutely, it's on a tear right now. This is just due to geopolitical factors, debasement of the dollar, a lot of stuff. Same thing with silver. We're just continuing to press higher. Not much really to say there. You can essentially catch trades on both of these pairs using just the execution, the micro perspective, because it's such a strong bullish run here that every single pullback and essentially on the micro structure can yield you an opportunity to just tag into the trade. And to be honest, you probably could just press buy and make money with this kind of stuff right now. It's just that strong. So yeah, and then on NQ, what we have is we finally broke out to the high side of this weird price leg. And that led us to pulling back, or not pulling back, but pressing into this daily, sorry, not daily, this 4-hour price gap here. That is counter to the bullish trend or the bullish bias. All right, so we mitigated that, and then we had a fairly decent response from it. But as you can see, immediately upon pulling back, it failed, and we had a very strong bullish closure, which leads me to think that this is still looking to move towards the high, especially if this price gap fails. There's no liquidity left to stop it. I mean, you could assess the actions here, but if the momentum is strong as we break this area of interest here, counter trend, then we're aiming for the all-time high, and then that's when we would need to assess the overall price action. But this was definitely how I analyzed this model here. This is what the price leg gave. This was the ideal scenario to get an entry, and this is the response that's moving higher. I sat on the sidelines for this because it was just very, very, very muddy price action. But if you could decipher it, then it was there, and you can take opportunities. But I was just focused on other things. I'm not even gonna lie to you. So yeah, as of right now, we're gonna go ahead and clear all of this, since we have essentially broken out. and we have the liquidity draw that led to it. So essentially, this is just a very prolonged draw in liquidity and then giving an opportunity here. If I was to boil it down, was all of this price action post liquidity draw was just formation of bullish price action and structure to lead us to pressing higher. It just took a very, very long time to do that. And actually, like, yeah, it took what, 3 months, November, December, and towards the end of January to give the full move to move higher. That's all this actually was in retrospect and looking at it now. But in the immediate, it was a little difficult to decipher. It took a little bit more analysis, a little bit more eyesight, forethought, and logic to make sense of this price action here. But boiled it down, it's just a liquidity draw and then looking for opportunity to get in. This was the most conservative and probably the highest RR entry that you could take to lead towards taking out this liquidity point here. All right, then on to the Dow Jones. The Dow Jones is also doing weird things. It's similar price action. I've talked about it already, that if price, I still don't think price has mitigated the origin of the move, which is this green box that I'm looking at. So I'm still looking for price to pull back into this. If it's failing to take out, this low here, and initially all price did today was pull back to really equilibrium of the range, and as you can see, it pressed ever so slightly into the discount. But upon mitigating the discount, what you can also see is that we do have an internal liquidity point here, and as of right now, this is looking like a potential draw on liquidity. And if this is a potential draw on liquidity, that means price will press higher. And if it presses higher, it's going to either reach for a liquidity point, but I also see an opportunity, or I also see price looking to mitigate this price gap here that exists. And so if this action is just the generation of a move to push price back up to mitigate this and then move lower, I can definitely see that. I just don't see the Dow Jones, as of right now, without completely balancing out this price gap, moving higher to take out the all-time high, or really the high of this price leg. So yeah, that's it for week 5, outlook number 2. Peace.